Hi friends, good morning, good afternoon. Let's discuss about basis of ledgers, what is ledger and why it is to be prepared, and what is the use of ledger in today's class. We discussed about journalizing transactions basis the source document and source document meaning the invoices, purchase invoices, sales invoices, pay in slip, bank pay in slip, salary slip, etc. We discussed about these things in the earlier class, and we also discussed about the journalizing the transactions basis the accounting concept and also basis on the golden rules. Now, the next step in the accounting is ledger posting. Ledger posting. We have seen that transactions can happen at any given date, right? Cash can get deposited at any point of time. Cash can be withdrawn. Sales happens regularly. Sales to multiple customers can happen at various times. Sales can happen to ABC and Company Limited on 1st of every month and also on 4th of every month, 5th of every month, 7th of every month, etc. Sales can happen anytime, right? And similarly, purchases can happen anytime. So the money what is due to a particular supplier basis a due date and money what is supposed to come from the customers for the sales activities, all these things will be recorded in the journal entries. But how much money is due to a particular supplier? How much money is to be recovered from a particular customer? How do we do these things? Because the transactions happen in a business over a period of time. How do we do this then? The summary of all the journal entries has to be posted into the ledgers. Ledgers are basically the summary of statement of transactions, all transactions that has happened in the company over a particular period of time. By summarizing the transactions, what is the advantage? Why should we summarize? By summarizing the transactions, we will know what is the balance due from a particular customer. What is the balance due to a particular supplier? What is the amount to be paid to a particular employee? What is the balance in my bank account? What is the value of my assets? We are purchasing furnitures, we are purchasing plant and machinery. There will be depreciation that will get recorded in the books of accounts. So, what is the value of my furniture? What is the value of my buildings or plant and machinery? What is the value of my assets? What is the value of my liability? From journal entries, we cannot ascertain all these things. Summarizing all these journal entries into ledgers will help us identify or ascertain the value that will help us to take to the next step in accounting. So, ledger is prepared based on the transactions recorded in the journals and it is prepared account wise. It is prepared account wise. Like the uh, advantage of a ledger is quick information about a particular account and control over the business transactions. And it also helps the next stage of accounting that's called trial balance and final accounts and finalization of accounts. Basically, the trial balance and profit and loss account can be prepared only when the transactions are summarized in a standard form called ledgers. And ledgers has to be prepared in a columnar form. I have given here the columns, the normal columns that goes into an ledger, any ledgers. Date represents the date when the transaction has happened. Particulars represents what all the things that got debited to the particular ledger account. Ledger folio is basically the serial number or the page number of the ledger where it is recorded. And amount is the amount what is recorded basis the journal. And similar is the credit. Let's get into this detail by going into more illustrations and in that way we can get more clarity on how we have to post an account, post the transactions into a ledger, into a ledger. I'm posting it in the next video. So if you have any comments or clarifications on this, just get back to me and I can clarify it for you. Thank you, friends.